Hey traders, Jason here from Leavitt Brothers. I hope you're well. Today I'm going to cover a few trades from this week. Many stocks that got hit extremely hard on the way down actually bottomed last week and were moving up while the market continued to sell off. Okay, so they got above key moving averages on shorter term time frames, and they were very well positioned to rally if the market would cooperate, which it has this week. So I'm going to run through some, give you an idea as to how these stocks could have been traded. Every single one of these stocks was profiled at Leavitt Brothers this past weekend as a potential trade candidate. All right, so let's run through a couple and see how you could have done. All right, so here is Red Rocks Resort. So as you can see, big downtrend, got rejected by its 21 here. Not really close there, but rejected again. Gets above the 8 and the 21, and notice here it sits above the 21. The orange line is the 21. Rallies up, comes back down, and then it finds support here at the 21 and at the 50 right here. Okay, so that gave you some entries along the 21 here. Strong finish on Monday, gap up Tuesday with huge gains, and then we had a gap up today where we posted on paper we're up big if you were in. So really nice play. Obviously, you're not going to get it off the bottom. I mean, if you do, you probably were wrong several times along the way. But if you wait until it rallies on strong volume, gets above a key moving average or two, moves up, comes down, tests that moving average, you have low risk entries. Okay, you're risking, you can get out over here. You're risking a little bit for the potential to make a pretty big move. So this was a really good one. Here's Jack in the Box. Again, downtrend, rejected by the 21, and I should mention that this is the hourly chart. Okay, all these charts are hourly charts. So it gets rejected by the 21, rejected by the 21 again. Moves up last week, starts riding its 8 up, gets above the 21, and then it sits mostly in a range here for Friday and then Monday. So there's entries here. Okay, so on Monday it opened weak, it came up, came down, successfully tested the 21, starting to move up again. So there's an entry there, and then at the end of the day where it has like a little fake move down, comes up, finishes pretty strong. Yesterday gaps up, builds on its gains, and then today it gaps up again and builds more on its gains. Okay, so again, very weak stock, not interested in playing it to the long side, but when it gets above its 8 and then gets above its 21 and finds support at the 21 here, there are entries there for a nice move up. And given today's volatility, a nice move up could be 20-30% in a day or two. Here's Dave & Buster's. So stock trends down, mostly below its 8 moving average. Moves up on strong volume, sits mostly above its 21. Okay, on Monday, so I played it over here. I was in and out, made like 30 cents or something. So I was flat into the weekend. Opened up Monday. It was weak early, but then immediately recovered, and then it very slowly moved up above its 8. Finished very strong, right at $10, which was resistance. If you draw a resistance line here, it was right at resistance, and then yesterday it gapped up and went up like 60%, and then early today it was strong early. So another really good trade because we got a nice bottoming pattern, resistance at 10, moves up above the moving average, comes down and rides that moving average, and then on Monday slowly moves up above the 8, gives you an entry, and follows through the next day. Here's Twilio, a more expensive stock, less meat on the bones, still really nice to play. So it moves down. It rallies here last week, but notice here's the 21. And here's the 8. So it rallies, but then it gives it up. So the 8 could only move up to the 21 and give it a little kiss, and then it drops back down. You get a double bottom here. And then on the second attempt for the stock to move up, the 8 actually crosses the 21. Okay, so it comes up, gets above the 50, sits there for 3.5, 4 candles, comes back up, goes up, tests the 21 a couple times, and then rallies up again. So really nice sequence here. For it to come down, form this double bottom, get through the 50, come down and test the 21, and then continue on. It's a really nice sequence of moving averages to pay attention to. So there are definitely trades in here. And again, because the market is so volatile, if you're in here at 80, the high today early was 100, so you're making 25% in just a couple days. All right, here's Planet Fitness. Okay, weak stock, kind of choppy, a lot of gaps in here, but still downtrend intact. You got resistance here at the 21, resistance here at the 21, other than that 1 day, resistance back here at 21. All right, so it gets over here, it actually gets above its 8 and starts riding it up. Then it gets above its 21 and just very slowly rides it up for about 2.5 days. Monday morning it opened weak and fell, but then immediately recovered, and then it slowly moved up all day, finished pretty good, and then gapped up yesterday and then followed through with the gap up today. So I'm not interested in playing it during here, but when it gets above its 8 and then gets above its 21, then it's on my list. Okay, it would have been nice if this stock would have moved up, got rejected by its 50, come back down and tested its 21, because that type of up and down movement is easier to play. This is harder because the stock's just kind of grinding in place with like a 3-point range, which in today's market, which based on the price here is like 10%. So it's not always easy. But there are still entries there along the 21 with a relatively tight stop and obviously, big upside potential. All right, here's Wendys. Big gap here, gets pushed down there by its 21, falls, jumps, rides its 8 up, gets above its 21, moves up, gets rejected by its 50, which is perfect, comes back down to its 21, which was last Friday. Then on Monday, it opened weak, recovered immediately, and then after settling back, it sat at support at its 21 all day long. Finished relatively strong. It's not apparent on this chart, but it finished strong and then gapped up yesterday and then gapped up again today and ran up pretty high. So again, nice sequence. Not interested in playing it, but you can see last Thursday, when the market wasn't doing that well, it actually started to bottom and moved up with force. Okay, we're talking like $7 to $12.50. I didn't get any of that move. Okay, but when it does that at the time when the market's kind of weak, I start paying attention. Okay, get a nice rejection by its 50, which is good. Comes back down, finds support at its 21. There are entries there. I played this one. I actually got in right here. You can see that that candle up. I actually got in there and then just sat in it the rest of the day. No reason to get out. And then got the nice gap up and run yesterday. Here's Penn National Gaming. Okay, weak stock, trending down, same thing. All these stocks are the same thing. Okay, starts to get, it pops off its bottom, got pretty good volume here. It starts riding its 8 up. Strong move up last Friday on big volume, gets above its 21, gets rejected by its 50, comes back down, closes the week, kind of weak, basically right at its 8 moving average. And then on Monday morning, it opened, tested lower, came back, and then sat above its 8 moving average all day long. Okay, strong finish, not apparent on this stock, not apparent on this chart, this time frame, but strong finish, and then gap up, again today. Oftentimes, that's all you get. Oftentimes, you'll get this constructive price action around the moving averages. You get a strong finish, which is a good entry. Then you get a huge gap up, which is the bulk of your profit. And the next day it gaps up again, and that's it. That's the trade is over. So basically from the end of day to the next day and then the next open, sometimes that's the entire trade. Okay, if you have a really weak stock, you can't treat it like a swing trade. You can't assume you're going to be able to hold for weeks and weeks or even months. Oftentimes it's just an entry one day, gap up the next day, and then the following morning is your exit. Okay, that's pretty common. Okay, at least in the market, which is very weak, you should consider that to be the entire trade and don't get profits back. Okay, so these are all examples from just the last couple of days. Every single one of these charts was profiled at Leavitt Brothers this past weekend as a trade idea. That's not all of them. There are others that worked out pretty well too. There are big winners here, okay? And it highlights the importance of being patient and picking your spots. You don't have to trade all the time. You can sit back, build your list, look for stocks that are slowly building positive pressure, and when the time is right, you can jump at them and make a lot in a relatively short period of time, okay? Thanks for listening. You can follow my YouTube channel right here by clicking the red subscribe button, and while you're sitting at home, take my mini masterclass in trading. It's free. The link is below. All right, see you next time, and good luck.